Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Friday, January 6th. I hope everyone had a good week. And after our first big rally of the new year, we actually finished the first week of 2023 positive. The S&P 500 finished plus 2.28% today, and that did push us higher for the week. We still are, if you take a look at the chart, trading in this range. We just kissed the bottom of this 3,900 level, and that is where the market stopped pushing higher today. We actually did come down off of it a little bit at the end of the day, and I think that this is a really, really interesting level that we're sitting at, because you look at it and it's a big move to the upside. We were talking about usually these markets that consolidate for a while make a big move one way or the other. And there are going to be people that sit on this over the weekend and look at this candle and maybe start feeling the FOMO that they're going to be left out of this rally to come. If you look on the chart, I mean, we have a high, a lower, or a higher low, a higher high, and then kind of like a higher low a little bit right here. But I don't know if I'm convinced yet that the market's going to move higher, because we still have this trend line right above us here. We're sitting right on a resistance level at 3,900 that we closed right below at the end of the day today, at the end of the week. And I think that Wall Street is going to trap some people at this level. I think it's going to be similar to how it looked over here when we had a little rally, over here when we had a little rally, coming off of a low, a little bit of consolidation. And I think it's just going to be another one of these traps. I think that the bear market will continue. I think we'll move lower next week, or we'll continue to consolidate. I don't know how much higher we go from here. At the very most, we're just going to get to this trend line, I think. So that's what I think right now for the S&P 500. Again, not financial advice, just my observations. For me, there's really no fundamental reason for this market to break through the trend line at this point. That's a level that the whole market can see and has respected during this market, and where we're at right now with monetary policy and the Fed. I just don't see it. So I still think there will be more opportunities ahead, investment opportunities. Let's take a look at Bitcoin really fast, because I do believe it's rallying as we speak right now. Let's take a look at it. So Bitcoin was higher today, but not as high as the stock market. Bitcoin's really kind of been weak in that regard. We're still in this range. Our high, as far as this range has gone, was from the 13th of December. And we're still consolidating. If history repeats itself, we could be in a range for a long time. We were in this one for about 5 months. And then we continued to move lower. I do think if the stock market makes that next leg down, I think we see it in Bitcoin as well. Let's see, when we got this big sell-off right here, that was around the beginning of November. Let's see what the S&P 500 was doing around the beginning of November. Had a little bit of a leg down, but not really. So I think we could definitely still see this level that we've had mapped out, the kind of the 9,000-10,000 to the 12-ish thousand. I think that's a range we definitely could still see on Bitcoin. I don't think the bottom is in for a multitude of reasons, but another one being that usually on Bitcoin you don't get this long to buy into the bottom. Even the level that we're at now, we've been for about 2 months. So usually this market doesn't give you enough time to buy into the bottom like that. It's usually real quick. And so I think that's another reason why we could still head lower. So that's what I'm looking at on these markets right now. Obviously, still consolidating. I guess I'll mention the jobs reports that came out today. The job market's still really tight. There's about 1.8 open jobs for every unemployed people. So the Federal Reserve definitely still has some work to do on their end from their perspective as far as demand destruction. Because if jobs are going to be not easy to come by, but people are still needing people more than they're trying to lay people off. I think that could be kind of, in the Fed's eyes, something that could stimulate inflation higher. So I think that they're going to do damage to the economy until they know for sure that inflation is going to get back down to their 2% target, and they don't know that yet. So obviously, they told us yesterday or earlier this week that they don't foresee any policy shift, pivot this year. Whether or not that's true, I don't know, but the reality of our situation right now is that we're still in this market. We are still in this market, all right? So that's what you're gonna have to live by. You can't buy into the FOMO. This is a big green candle, but guess what? We've had lots of big green candles in this bear market, and the market keeps heading lower. So for now, that's where I think that we'll go, but that'll bring great investment opportunity as well. So we can talk more about that another time. I'm gonna leave it right here. If you enjoy these episodes, please subscribe on YouTube and follow wherever you listen to podcasts. And until next week, have a great weekend.